Thank you very much. So, I think there's been one topic that we've heard on every single panel and presentation today. And I'm going to call on someone to tell me what that theme is. Nikos Petrakakos. What is the one theme we've heard on all sessions today?
ESG.
ESG. Barry Parker?
Decarbonization.
Decarbonization. Right. Decarbonization. And the conversation kind of fizzles out a lot of the time because it's sort of relatively unclear what the solutions will be. And, for much of the shipping industry, this is a cost, right? I mean, it's an added cost, not really necessarily a profit center. Our next presentation is going to address and kind of look at this topic from a different perspective. And it's a great pleasure to welcome Hal Malone to the stage. Hal, come on down. Oh, I would assume everyone knows Hal. If you don't know Hal, raise your hand. No hand.
No hand.
Hal's been in the shipping finance community for probably close to 20 years.
Yeah.
Initially as an investment banker at RBC and Jefferies, and then on the owning side at Navigate, and then oversaw the $2 billion?
$2 billion roughly. Yeah.
$2 billion portfolio of ships owned by W.L. Ross, later known as Invesco. And in 2020, Hal formed a business called C-Switch, and I think the goal there was to kind of leverage what he had done in his career on the topic of decarbonization and kind of put that to action. And he can tell you more about that, but one of the things that Hal is doing that we're super excited about is he's a member of the index committee for the Marine Money Decarbonization Index. And he's going to tell us about that today. But we're really happy to have you, and Hal's going to take us through the index, and also an ETF was launched on the New York Stock Exchange through ETFMG and Breakwave managers who have the B-Dry ETF, the freight dry cargo freight futures. So Hal, thanks for being with us, and we look forward to kind of taking us through the index and the ETF.
Great. Thanks, Matt. And ooh, look at this, Matt. You're
almost clear.
Amateur hour up here, guys. So, and Matt does promise if I do a good job and I generate sufficient orders today, that he will tell the people not to send any emails for conferences that are in countries that no one can attend at least a 5-day period. So if we can do a good job, we can all rest over Thanksgiving without getting emails for any Asian conferences.
You can also highlight this on the
Yes, and so thank you, Matt. Hopefully I'll share a little bit about something that's a little new and different. I'm very excited to be part of the team that's put this together with Matt and his partners at Marine Money, John Kartsonis at Breakwave, and then our partners at ETF MG. And just to give a little bit of background of the parties that may not be known to everyone, as Matt and seemingly I am. ETFMG is a specialized ETF manager. They have about 20 different funds that they are in the market with on a wide variety of themes, and currently have about $7 billion of assets across that portfolio of funds. One of the relatively early funds they did was with our other partner, John Kartsonis at Breakwave, and that is a fund that's focused on dry bulk FFAs called B-Dry, and they were our partner in late September in launching BC. Maybe I'll just start by giving a brief explanation for what an exchange-traded fund is, particularly for people that aren't from the U.S. and so aren't necessarily familiar with that concept. But an ETF is basically a type of security that tracks a broad range of things. So it can track an index, it can track a sector, it can track a commodity or another asset. And so in many respects, the way to think about BC is like an open-end mutual fund that trades like a stock on a stock exchange. So why would you want to buy that versus something else? One of the big benefits versus a mutual fund is that ETFs are very tax efficient. So they're not distributing to you the capital gains. So that improves your tax position. It lets you make a thematic investment without being exposed to a single stock, so you can have a portfolio approach. And particularly important for BC, it lets you have global access with something that's listed in your home market, so you're able to get global exposure with this stock that trades sort of when your market's open in the currency that you're used to. Just quickly to talk about B-Dry, which is John's first fund. That is one that tracks essentially another asset, dry bulk FFAs, and as everyone here has probably seen the market, it's been a great success this year, and despite the market correction here over the last month or so, is still the top performing ETF year to date globally. And BSEA, which we launched at the end of September as well, has had a very good start since we brought it out. So what exactly is BSEA? BSEA is a fund that tracks an index, the Marine Money Decarbonization Index, that Matt, John, and I sit on the index committee of, that's focused on identifying companies that are investing in developing technologies to decarbonize shipping. So it is categorized as a technology fund, and I think, as we've heard throughout the day today, this is something that's very important to the industry, but it's also something that is at a very early stage. It's not clear what's going to be the winning technology, what are going to be the winning companies, but it is something that, I think we're all confident is going to be a long-term theme in the industry, and that there's going to be a tremendous amount of capital invested to address the need to decarbonize the sector. I think everybody in this room knows that shipping is a critical sector. It moves 80 to 90% of the things that we consume, so there's really no way to replace the critical services that I think everyone here is helping provide. But it is a significant contributor to the global carbon footprint. 2 to 3% is generally the figure that people see. To put that in everyday terms, if that was a country, it would be roughly the same size as Germany's emissions, and the global shipping fleet is equal to roughly the emissions from all of the passenger cars in the U.S. So when you think about all of the effort that's gone in, the investment that's made, the technologies that have been developed for the automotive passenger car industry, and think about where shipping is, we're really at a very early stage. And part of that comes from how hard it is to really abate the emissions in the industry. So what kind of companies do we have in the index? We have a number of different companies focusing on different aspects of the value chain. So we have companies that are focused on onboard systems, so really trying to improve the efficiency of the existing fleet, as well as bring next generation technologies to market. We have companies that are working on new propulsion solutions. We have green fuel and infrastructure companies, and we have also included various offshore energy technologies. So here's a list of the 20 companies that make up what we call the core component of the index, and what we have done is structured the index such that these 20 companies receive 80% of the weighting, and then we have a basket of 30 additional companies we call the tracking tier that have the balance of the 20% in the index. So it's intended to give you a broad exposure, a footprint to all the different technologies, but at the same token, be able to concentrate the capital and the index performance in the companies that we view as the leaders today in their sectors. Why is this an interesting investment that we've put together? It really is focused on a greener planet. The constituents that we have in the index and that are now part of the portfolio of the ETF are not necessarily the companies themselves that operate the ships, but it's really a disruptive technology group of companies that are trying to make a positive change. As I touched on earlier, one of the general benefits of ETFs is it does allow you to get exposure to markets or companies that are more difficult in your home exchange. this is the exposure for BC, and as you can see, there is a substantial number of components that are listed in Europe, in particular Northern Europe. I think people appreciate that that's really the leading center currently for a number of the technologies that are being developed, where the trials are taking place, as well as the capital markets activity. So these are companies that your average U.S. investor is not going to probably be able to go research, may not want to take the exposure within an individual, say, internationally listed stock, and so this is an opportunity to get a basket of exposure to those kind of companies with something that's listed on the NYSE stock exchange. It is within the ETF community the first mover. It is a very unique theme. It is the first fund that we're aware of that's focused on decarbonizing shipping. Shipping in general, I think, as everyone is aware, is generally an uncorrelated sector with the broader markets. This, as opposed to BDRI, doesn't have exposure to the underlying freight markets, but does provide a fair bit of differentiation within a portfolio given the lack of correlation. It is a growth segment. I think everyone has seen the numbers that are in the trillions in terms of the amount of investment that's going to be needed, and these are the companies that are going to be receiving those orders, those capital flows as the winning technologies emerge. It is difficult to access a number of the stocks given their international base for U.S. investors, and I'm very excited to have been able to partner together with Matt and the team at Marine Money and John and his team at Breakwave, given the tremendous amount of research and industry insight that they have. So we really do think we've done a lot of work at identifying the right companies given the theme we're focused on, and we started already bringing research to market around the theme, and we expect that we'll have additional research product really giving insight as to how we see these technologies developing in the balance of this year and into next year. This is a little bit more of the technicalities behind it. Briefly, as I did touch upon, we've structured it with two tiers. The one tier having 80% weighting in 20 stocks, and then a tier having 20% weighting at this point with a basket of 30 stocks. We have had to put in some technical capabilities. So obviously, these are all companies that have to be public, have to be listed on a major exchange, and have other technical capabilities. And so far, since we have been tracking the index, which we took all the way back to the beginning of 2019, it has substantially outperformed the broader market. A lot of that is really around the theme that we've heard throughout the day. That ESG is something that comes up in every meeting, and something thematically that people are looking to deploy capital into. We took it all the way back through 2019, given a number of these companies are fairly emerging, and so prior to that, either they were in different businesses or a number of them have only come into the capital markets within that time frame. So with that, I don't know if the McClearys will permit me to answer any questions if there are any, but otherwise, we have a question. Yes, sir.
Why isn't a NETI in the index?
Why isn't a NETI in the index? Because the index is really focused on companies that are developing technology as opposed to asset owning companies. So similarly, one might ask why we don't have ship owners in here that have been developing leading edge technologies, and it's really intended to be a technology company, not an asset owning company. So I think we've would love to see those companies, those technologies develop, but it really is a technology, not an asset company. Yes, George.
Val, thanks for the fantastic presentation. Question on the research. Can you expand what goes into deciding what a new investment will be, the research team, et cetera?
So, for those of you who know John and have seen the research that he produces around dry bulk, I would encourage anyone who's not to go and visit Breakwave and see the quality of the work that they do there. And so we have been building out that same that same backbone around what we're doing in decarbonization. But really, it starts with screening the universe for the technical qualifications, because you do have, for functioning in the ETF, have to have minimum market cap, minimum liquidity for a stock to be considered from a technical perspective. And then we're really looking to think about companies a couple of different axes. One of them is, how meaningful can their technology be? The second is, is that a technology that is deployable today? And then what percentage of that company's focus is in the maritime sector? And so obviously the company that would have the highest score, which would be a company producing a zero emission ship technology that was 100% in maritime and was deployable today, doesn't exist. And so it's really within those criteria making a judgment as to who we think are the leaders and what technologies have the potential. Great. Seeing no other questions, I will let everyone get ready, and we'll watch the volume and see whether or not we'll get a restful Thanksgiving.